All right, everyone. Thank you so much for having me. I'm excited to talk with you today about cloud go-to-markets. My name is Roman Kirsanov. I'm founder of Partner Insights. And to tell you more about what we've been up to and why you should even listen to me about cloud go-to-markets, we have in Partner Insights this course, Cloud Go-to-Market Leader course, and we trained like close to 200 leaders from all these great companies and many more. And in addition to that, we also do events, like in-person events. We did events with all cloud providers in 2024. More than 1,000 leaders sign up to us. So this is all coming from experience, and you can follow me across newsletter, LinkedIn, and YouTube, along with 20,000 other people. So today we're going to be talking about topics that are very dear to my heart, and we're going to be talking about momentum in cloud marketplaces, and what customers see in cloud marketplaces, and how you as a seller, if you want to sell through cloud marketplaces, should use them. So just to preface, many of the things are going to be about top 3 cloud marketplaces: Amazon, AWS, Microsoft, Azure, and Google Cloud. But the reality is that it's also applicable to many other cloud marketplaces, including your own. And we know for a fact that big clouds, which is not top 3, a little bit smaller, but still big, took our courses, and they've been using our strategies for their own cloud marketplace. That's why it should be relevant for you as well, hopefully. So let's get going. When we made this calculation in December 2024, this kind of made me pause for a bit, because if you look at market cap of top 3 clouds, right, they just added $1.8 trillion in 2024 alone. And to put this number in perspective, like there's a software index in NASDAQ called mCloud, Emerging Cloud, by Bessemer Venture Partners and NASDAQ together, which includes all the great companies like Shopify, Snowflake, Salesforce, Atlassian, and so on. And if you combine the value of all of these 67 companies, you'll get to about $2 trillion. So what I'm trying to say is that clouds in 1 year alone, from scratch, kind of added all of these companies to their valuation. The question is like, what does it mean for us, software companies, vendors, and everyone else in the ecosystem? So this momentum is also showing in preferences how companies spend. And this is survey from Battery Ventures in terms of what are the top 5 CXO priority spend. And what is incredible is that clouds continue to be #1 priority, right? A lot of people are saying some time ago that cloud might be not as fancy as it used to, but reality is that generative AI and AI in general accelerated cloud even further. And we see that enterprise tech spend index is going up from much more compared with a year ago when it was evaluated in 2022. So, but you may say like cloud is great, but like what does it mean for ISVs? And this is where it's going, right? This is a projection from Goldman Sachs. They anticipate cloud to hit $2 trillion in 2030 from 500 billions in 2023. But the good news for everyone else, like ISVs and SaaS companies, SaaS continues to be the largest share of pie, even in 2030. So this means that all software companies get a lot of value from clouds, and get a lot of value from cloud acceleration in this sort of medium to longer term. And this is reflected in Bain projection. They looked at the value that AI is getting, and even though cloud is growing pretty high, and if you look at the numbers, you can see that obviously infrastructure is growing, everything is growing, compute and so on. But models obviously is #1 in terms of growth, but the second largest growth expected from 2023 to 2027 is applications and marketplaces. So that is to say that marketplaces are the second highest growing category in cloud. I think it's pretty compelling to think how to leverage this model in your day-to-day go-to-market. And this incredible momentum across cloud actually resulted in many companies signing huge cloud committed spends contracts, right? This is not just intentions, it's signed contracts. And we'll talk in a second about that. And this total number across three top hyperscalers hit $380 billion in 2024. And again, just to put this in perspective, and explain like maybe before that why it's important. Because this cloud committed spend is one of the reasons why companies start using cloud marketplaces. And this is, think about it as like a wallet where you have some money and you can go and buy not only cloud services, but also third-party services through their marketplaces. And this accelerated the entire flywheel of cloud marketplaces. And I think kind of building momentum for cloud marketplaces and marketplaces in B2B software to be ubiquitous and well accepted. Going back to these cloud commitments, again, this is in addition to revenue that clouds themselves are getting. They get obviously they're growing. Their own revenue is growing 20 to 30% depending on the cloud. But in addition to that, cloud commitments are growing also 20 to 30% according to these numbers. And we expect these cloud commitments to hit $500 billion in 2026. This is to say that they're only going up. It's not going to go down. And the $500 billion is a number that's almost unrelatable. And you might say, what does it mean? But here's like a few examples of software companies that signed specific cloud contracts with specific hyperscalers. This Snowflake signed one of the contracts. You can see that their commitments are growing year over year. So another company called Reddit, they signed 300 plus million in commitments. And another company you may have heard of, Affirm, they signed another $650 million in cloud commitments. So amazing numbers. And all of this boosts cloud marketplaces. So let's talk about cloud marketplaces. So what does it mean, cloud marketplaces? Cloud marketplaces is essentially a middle layer between infrastructure, platform, applications, and business customers. So I think this includes cloud marketplaces from cloud providers, but it also includes marketplaces from ISVs. And I think the main keyword here is convenience. It's very convenient for customers to go and buy all the software from cloud marketplaces. And another keyword for cloud marketplaces is scale. If you look at how many products today exist in marketplaces of big cloud providers versus their own products, again, it's a little bit dated data from 2023, but the reality is that it's order of magnitude larger or even more, right? So marketplaces are scalable versus building your own products are difficult. And let's now talk about value between essentially buyers and sellers on marketplaces. What does it get? And why, like, again, why are we talking about that? Because you need to understand how to behave and how to build marketplaces. You need to understand what is the value customers are getting and what is the value that sellers are getting from selling through marketplaces. So we hosted events with Microsoft that highlighted this research that they had with Forrester. And again, marketplace value for customers is pretty substantial, right? So they onboard new vendors 75% faster. They get procurement engagement 50% with 50% less effort, and they save time and essentially it's less time, more convenience. And now let's switch to sellers. This is from Google Cloud, but again, these numbers are somewhat similar across cloud providers. So sellers get faster deal cycle. They have increase in deal win rate. They close larger deals, and therefore it's like win-win for both parties. It's not to say that it's easy, but it's to say that both party benefits from getting on marketplace. And therefore, all of this propelled cloud marketplaces into CEO agenda. And not only CEO, but also boards. I would argue that it's now top 5 priorities for CEOs to figure out the strategy, unless they already done it. So, for example, Okta is doing a great job with cloud marketplaces. In 2023, the CEO was saying that they were excited to get into a new channel, which is cloud marketplaces, that is really emerging, and customers want to retire their cloud commitments. And this is one of the reasons why early adopters jumped into cloud marketplaces. Another example is Dynatrace. Dynatrace is winner of 2024 Microsoft America Partner of the Year Commercial Marketplace. The CEO was saying that they closed 15 of 18 seven-figure deals in one of the quarters in collaboration with partners, especially hyperscalers and GSIs as well. So it's marketplace is definitely a new channel that everyone is prioritizing today. But I think perhaps the most impressive and kind of telling signs why should everyone should consider using cloud marketplaces or like marketplaces for software in general is Salesforce, right? When Salesforce in November 2023 announced that they're gonna start selling their products on AWS Marketplace, you see that their shares jumped pretty substantially on the announcement. And you fast forward 9 months on the quarter debrief, and they essentially were saying that 3 of their top 10 deals were closed through AWS Marketplace. So I think why it's telling about this Salesforce, because Salesforce is a company that's before Apple figured out that they need to build their sort of app store, right? And Apple built their app store for B2C after Salesforce. So I think the fact that Salesforce is jumping on AWS Marketplace and closing largest deals in the quarter is telling us a lot. Another telling sign, probably that doesn't need a lot of debrief, but I'll tell you a few words about Shopify. Shopify, probably one of the largest B2B ecosystem itself, and they've been talking about ecosystem for a very long time. But they recently joined, actually in 2023, they joined Google Cloud Marketplace itself. And the question is, why did they do that? And they did that because they wanted to streamline purchasing, simplify billing, and reach customers that have cloud commitments. Again, same theme from different angle. And essentially what is happening in B2B SaaS is that the third-party revolution is the same playbook that is flowing from B2C to B2B, right? So this is data from BCG showing this is what is happening in B2C, and exactly the same or similar trend is happening in B2B. So in B2C, share of third parties is like a green here is growing almost 2x faster compared with first-party sellers. So third-party marketplaces, third-party sellers are growing more aggressively, faster across Walmart, Amazon Marketplace, and everywhere else. So this is probably one of the reasons why AWS recently, going back to our B2B kind of landscape, AWS announced buy with AWS. Essentially, they recognize that not only companies want to go to AWS Marketplace, but they may want to stay on their own websites and then still buy through AWS Marketplace. So they introduce this button, buy with AWS, when everything is going under the hood. Think about basically B2B type of Apple Pay. And last but not least point on marketplaces is from Ignite in November 2024. Marketplace of Microsoft shows huge acceleration with AI. Number of AI products is of number of AI products that customers are purchasing is going up like almost 4x, and the number of AI offers that customers are listing almost going 163% as well. So that is on the state of the land with cloud marketplaces themselves. Let's talk about adoption of cloud marketplaces. And maybe to like recap what we talk about that, essentially cloud go-to-market is a new type of go-to-market, which is distinct from previous generation of partnerships. It's much more focused. It gives you access to thousands of sellers. If you do cross-sell, it gives you access to standardized customer experience through marketplace. It gives you global coverage and it gives you much more focus on revenue compared with traditional partnerships. And this is one of the reasons why marketplaces already won more than 10% of enterprise software spend. This is data from BCG. Again, today it's probably even higher, but the weighted average last time they measured was 10.2% of enterprise software spend was spent through marketplaces. And not only that, but also more than 2/3 of respondents wanted to increase the spend through marketplaces. Again, it's convenient, it's faster, and so on. And another survey from cloud customers showed similar trends, essentially 50% of users. Again, it's important because it's sort of independent survey from cloud customers by Ofcom, British regulator, showing that 50% are using cloud marketplaces by buying third-party services, and they also, half of them, do research and discovery of new services. Pretty important, and I think it's really compelling trend. Another point, much more recent, from sellers. Iconic did research of their software companies, and 47% today are using cloud marketplaces on the seller side. So it's also going back and forth, right? Buyers and sellers, they both use software cloud marketplaces almost to the same proportion. But I think you may kind of ask, okay, cloud marketplaces is growing. Will this somehow be of detriment of channel? But reality is that channel is growing as well, because channel has unique ability to decrease sales cycle, and obviously they have very close relationship with customers, and as a result, channel revenue is growing as a percentage of total revenue across infrastructure, vertical SaaS, and horizontal SaaS as well. So this tells us that marketplaces and channel will be better together. It's not going to be easy, but I think the motion from both sides is to figure out how to work well. Hyperscalers are doing a lot of that as well. And just like companies, kind of when they go, when they grow, they go multi-cloud. Just like that, companies also go multi-marketplaces. This is data of companies. Well, when they progress in their cloud spend, they increasingly use multi-clouds. So let's talk about now how to win in cloud. First, go to market. And before we jump into that, I think it's important to understand that it takes time. It's not immediate win. It's not like you list it on one of the marketplaces and all of a sudden you are racking millions of dollars. It takes a little bit of time to figure out. It takes strategy. And I think CrowdStrike is a telling example, because CrowdStrike is one of the companies that first actually announced that they sold like $1 billion through AWS Marketplace. It was a huge wave through the market, and then more companies announced similar numbers and so on. But if you look at the trajectory, you will see that CrowdStrike being added for years, right? And they kind of gradually were building momentum in cloud marketplaces, and in 2023, here they reached $1 billion in total transaction, I believe. So another thing from CrowdStrike example and sort of case study is that they also did that with partners. So they didn't do it alone. And I think, again, another telling examples. So how companies use marketplaces today? How you should use marketplaces today? So there's like three type of motion that you can think. One of them is opportunistic. You sort of do it 0 to 5% of potential revenue, right? And as data from BCG, this is how they framed it. And I think it's great. And then there's another bucket, which is marketplace for scale, 10 to 25%, and then marketplace first. And marketplace first would be companies like CrowdStrike, companies like Viz, and other companies that prioritize marketplace go-to-market. I think opportunistic is maybe something that company can try, but reality is that you need to be very deliberate to win in cloud marketplaces. And I think I would challenge everyone to use marketplace for scale if your product aligns and all of this stuff. But I think this is where you want to be in these two buckets. Other things that people struggle to understand where money is like public offers, which is pay as you go, self-serve, or private offers. And reality is the majority of money today, the value of transactions, I should say, goes through private offers. But increasingly, public offers is picking up, and public offers essentially self-serve, right? And you can see this data from 2023 from BCG that self-serve was kind of 10%, right? If you say that it's sort of directed, people go and find you on marketplace, and then another 15 to 30% when ISVs go and say, hey, we are here on this and that marketplace, go and buy us there. And the rest of it, which is 70 to 80%, or some people say 60 to 70%, are going through private offers. So you should understand like where the money are, like what's your product, how it's structured, and so on, because I think this is pretty important. But to win in marketplaces, you need to make 5 mindset shifts to get to real value, right? So you need to consider this as an opportunity, because I think it's a big market that is shifting that way, and if you want, use it, and if you will not take leverage of the shift, your competitors obviously win, right? And the question is, how do you tap into this $380 billion of cloud committed spend, or how do you tap into opportunity of your customers using marketplace? Like, how do you tap into opportunities of your customers using your own marketplace? Then you need to have very deliberate go-to-market strategy. You need to figure out, not just throw a bunch of products and wait until some of them will win. You need to validate with some of your best products, because you want to have strong signal, okay, it's working elsewhere. Will it work here? How this will work here? And then based on this, build sort of momentum. You need to have internal alignment, especially with sales, and but also with finances and everyone else. You need to have cross-sell excellence, because if you're talking about big deals, you still need to work with cloud sellers, or like sellers on the other side, with partner sellers, and understand how do you leverage that, because it's pretty important, and it's sort of impossible to be in big without figuring out cross-sell. And obviously growth acceleration. I think a lot of companies are battling this idea that marketplace should be only for new deals, should it be for like renewals and so on. And we see a lot of good examples when renewals are used as to grease the wheel, to get momentum, and so on and so forth. So, but obviously you probably know it by now, but still worthwhile saying that marketplace listing is just your entry fee, right? Because it's a big crowded environment. I've heard like really good example. If you publish a website on the internet, you don't expect it to be discovered all of a sudden, right? I think this is something that is definitely happening in marketplace today because they are not new already, but I believe it's still early, right? If you go back to the cloud discussion we had in the very beginning, marketplaces are clouds still have 80% of capacity to go, right? It's only 20% ish. Some people say 30 went into clouds. So the big part is still ahead of us. The same as marketplaces. I think marketplaces still like early, but and everything ahead of us. But the being bunch of momentum, so you will not be the first one, but you definitely will not be the last one. And you need to understand that marketplaces do not act as resellers. They do not actively hunt new customers for you. As much as we want this to be happening, I think talking about cross-sell, I often use this example of Frank Sludman talking with Satya Nadella about nothing else but field alignment. And I was thinking, like, why is this two super important CEO of such incredible companies talking about field alignment? But reality is that without field alignment, nothing happens in cross-sell, right? So this is a quote from Frank, who is saying that the bottom line is not what gets said at top level. You need to figure out incentives. You need to figure out how your sellers align with cloud sellers or other sellers. And then this creates kind of good momentum. And finally, talking about mindsets, John Junke, when we talked in our podcast, said that like in the next 5 years, every seller in a software company will know how to win with cloud marketplaces. But again, the reality is that today you need to educate your sellers. You need to build champions. You need to nurture them. You need to find people who naturally want to sell through cloud marketplaces and get traction, show this to others. So other like piece of advice coming recently from the last AWS reInvent. Again, the majority of companies, for some reason, do not have free trials on marketplaces. But it turns out that a quarter of the customers say that free trials are essential. Unless there's free trials, they will not even consider buying your software. And what AWS found is that if customer goes to free trial, then converts into pay-as-you-go, right? Consumption kind of based pricing, and then you can nurture them, and then you can convert them into contract. And this produces 3 much higher conversion from free trial to pay-as-you-go. So I don't think we need to add anything here. As we sort of approach in the end, I guess we build a bunch of maturity models in Cloud Go-to-Market Leader course. But essentially, the idea is that as you start using cloud marketplaces or build your own, there's a clear steps and clear progressions that exist, from like reactive, sort of opportunistic, we discussed before, to organized, to embedded. And your goal is to embed this into your organization. And it takes some time. It takes some internal transformation, but it's completely doable. There's a bunch of frameworks and playbooks that exist. Inevitably, it might feel that success in cloud go-to-market feels like this convoluted line. It still feel that way, but I think if you feel like you lost in one of the turns, I would encourage you to get help from our friends in Cloud Brew. We do a bunch of education and training and so on, and others. And with that, I would encourage you also to follow us on LinkedIn, newsletter, and YouTube. And hope it was informative, and I look forward to hearing your feedback.